Most entrepreneurs choose their business state based on a YouTube rumor, only to realize later they've built their foundation on sinking sand. You hear about the tax havens and the privacy of Delaware or Wyoming and assume that's where you belong. But for the average founder working from a home office, that exotic filing is often a $1,000 mistake hidden in plain sight. The psychological pull of saving money often blinds us to the compounding costs of complexity that show up in the second year. You feel smart because you followed the pro advice you found in a comment section. You see the $0 income tax in Nevada and think you've outsmarted the system before you've even made your first dollar. But the state where you physically sit has a very different opinion on who owns your tax bill. If you live in California but file in Wyoming, you haven't escaped. You've actually just doubled your paperwork. This is the foreign qualification trap, where you pay the home state for the right to exist and the away state for the privilege of filing. Typically, many business owners find that the $300 they thought they were saving turns into an annual $800 compliance headache. Typically, the home state where you perform the work, whether it's coding on a laptop or shipping from a garage, claims jurisdiction over your business. If you ignore this, you're not just saving on a filing fee, you're effectively operating an unregistered business in the eyes of your local government. This is where the momentum shifts from building a dream to managing a crisis. Suddenly, your focus isn't on marketing or product, it's on answering frantic emails from a registered agent you've never met. Historically, the simplest path is the most profitable one. File where you are and keep your legal footprint as small as your physical one. Many business owners find that the mental peace of a clean filing is worth more than the $100 they might have saved in a tax-free state. On average, a single-state LLC costs less to maintain, is easier to dissolve, and keeps your accounting fees from spiraling out of control. Complexity is a tax that you choose to pay, but clarity is a profit you decide to keep. Next, watch this video where I explain the hidden fees of registered agents. It will save you time and money. Let's look at the numbers. Delaware charges a $300 annual franchise tax regardless of whether you made a dime. That's a flat fee, whether you profit or not. Now add a $50 to $150 annual fee for a registered agent, because you don't have a physical address there. The term nexus sounds like science fiction, but in the world of LLCs, it's the invisible tether that connects your bank account to the state's tax collector. If you have an office, an employee, or even a consistent home desk in a state, you have created a physical nexus that overrides any out-of-state filing. Typically, the state doesn't care if your home is in Nevada on paper if your actual work is being done on a couch in Ohio. On average, most states require you to register as a foreign entity the moment you begin transacting business within their borders. This means you aren't replacing your home state's fees, you are simply adding a second layer of state filings on top of them. In many cases, the foreign qualification fee is actually more expensive than the original filing fee was in the first place. Many business owners find that they are now paying 2 annual report fees, 2 registered agent fees, and 2 sets of franchise taxes. Historically, this is the moment where the cheap Wyoming LLC becomes a $1,000 a year maintenance nightmare for a $50,000 a year business. Psychologically, we hate the idea of leaving money on the table in taxes, but we often ignore the money we're throwing out the window in fees. Before you file, you must ask, is the tax benefit of another state greater than the cost of maintaining a legal presence in 2 places? The most painful realization for most founders is the discovery of double taxation on the exact same dollar of income. If State A is where you registered, they want their franchise tax. If State B is where you live, they want their personal income tax on those same profits. You aren't just paying more, you are paying for the privilege of hiring a specialized CPA to figure out how much you owe to each. On average, The cost of a multi-state tax return is triple the price of a standard single-state filing. This is the complexity trap, where the administrative weight begins to sink the very ship you're trying to sail. Typically, the IRS doesn't care about your state filing, but your state Department of Revenue most certainly does. Many business owners find that a single notice of delinquency from an out-of-state agency can freeze their business bank account in an instant. The psychological cost of this uncertainty is the midnight panic, the feeling that you've missed a deadline you didn't even know existed. Historically, the most protected business is the one with the fewest moving parts and the cleanest trail of compliance. If you've already filed in the wrong state, don't panic. The path to correction is simpler than the path of perpetual error. There is a mathematical tipping point where the benefits of a state like Wyoming finally outweigh the costs of home state registration. Typically, this only happens when your business is state agnostic, meaning you have no physical office, no employees, and no inventory in any one place. If you are a true digital nomad, the state of Wyoming or South Dakota becomes your legal home base without the foreign qualification anchor. On average, the threshold for this complexity to make sense is when your annual revenue exceeds $100,000 in pure digital sales. Below that number, the administrative hours you spend tracking multi-state filings are often worth more than the tax savings themselves. Many business owners find that privacy is the only other valid reason to file out of state, especially in states like Delaware that don't list members on public record. But remember, privacy is not secrecy. The IRS and the banks always know who you are, regardless of what the state record says. Historically, the asset protection of a Nevada LLC only works if you actually follow the strict corporate formalities of that state. If you treat your LLC like a personal piggy bank, no state in the union can protect you from a lawsuit piercing the corporate veil. In many cases, the best protection is actually a $500 professional liability insurance policy in your home state, not a complex out-of-state LLC. Now, let's look at the exit strategy. Are you planning to raise venture capital or go public one day? If the answer is yes, then Delaware is the only state that matters, because that's the only language investors and their lawyers speak. But for 99% of small businesses, you aren't building a Silicon Valley unicorn, you're building a sustainable lifestyle business. In this scenario, Delaware is an expensive accessory you don't need, like buying a racing helmet to drive to the grocery store. The reveal is simple. Unless you have a specific, high-level reason to leave, your home state is almost always your most profitable partner. To lock this down, you need a 3-step checklist before you click Submit on any Secretary of State website. First, verify your identity. Then, confirm your address. Finally, review your information. Step 1. Define your physical nexus. If you have a dedicated desk in your home, that state is your default home base. Step 2. Compare the total cost of ownership. This isn't just the filing fee, it's the annual report and the registered agent cost combined. On average, states like California or Massachusetts have high fees, but the cost of foreign qualifying back into them from Wyoming is often even higher. Step 3. Consider your banking. Most traditional banks require your LLC to be registered in the same state where you have a physical presence. Typically, trying to open a bank account for a New Mexico LLC while living in New York results in a compliance freeze before you even get your debit card. In many cases, the pro tip isn't a secret sauce. It's simply using a DBA or a trade name to test your business idea before you file any LLC at all. Delayed gratification is your best friend. Historically, the most successful founders wait until they have $5,000 in revenue before worrying about complex legal structures. Many business owners find that the IRS sole proprietorship status is perfectly fine for the first few months of a side hustle. But once you're ready, don't let the fear of making the wrong choice paralyze you. The home state is your default for a reason. Avoid the registered agent upsell where they charge you $300 to do something that takes 10 minutes on a government website. This premium service is essential for your business. On average, you can file your own articles of organization in under an hour for just the cost of the state fee. If you still feel the pull toward Delaware or Wyoming, ask yourself, am I solving a legal problem or am I just avoiding a local one?
Clarity comes from action, not from over-engineering a structure that doesn't have any revenue to protect yet.
The most expensive state is the one that causes you to quit because the paperwork became too heavy to carry. Typically, the goal of an LLC is to create a shield between your personal life and your business risks. Many business owners find that they can strengthen this shield simply by keeping their business and personal bank accounts strictly separated. On average, the complexity of your state filing matters less than the consistency of your record keeping. If you choose the home state path, you are choosing the path of least resistance, letting you spend your energy on sales instead of statutes. Historically, the businesses that survived the first 5 years are the ones that mastered the basics before chasing the advanced. In many cases, the most sophisticated move you can make today is to stop looking for a loophole and start looking for a customer. Every dollar you don't spend on an unnecessary out-of-state filing is a dollar you can reinvest in your own growth. You are building a legacy, not a library of legal documents. Keep it lean, keep it local, keep it yours. The right state isn't a secret location on a map. It's the state of mind where you stop overthinking and start building. Complexity is a tax that you choose to pay, but clarity is a profit you decide to keep. Next, watch this video where I explain the hidden fees of registered agents. It will save you time and money.